XRP family, they want you to leave. What we just saw could be one of the most planned and well-executed crashes in the history of crypto. Since 2018, I've been in this market and seen a lot of abuse, but this is the worst I've seen so far. What happened was not a coincidence. It was timed, it was planned, and it was done perfectly. Just as the money ran out, as the futures markets were ending, just as buyers were getting comfortable with the idea that the worst was over. This is not advice about money. Please pay close attention, as you will understand what I mean if you were following the charts when this thing went down. XRP didn't just fall, it was smashed into the ground. We were near the 310 level, which has been holding strong for weeks. 1 minute, the next day Binance saw it drop to 1.25. In less than an hour, that's a 53% loss. People were being thrown out all over the place. Positions went away, orders got stuck, exchanges were slow, and right in the middle of everything, Coinbase futures shut down for maintenance. I might add that it was conveniently timed, leaving traders to look at blank screens and wonder if they still had a deal open. There have been times when Flash crashed for me. I have seen liquidations and panic lights, but this one felt different. It was not caused by fear, it was planned out. It took place right before the Coinbase futures market closed. Between 5 and 6 p.m. Eastern, the last day of dealing for the week for Bitcoin, Ethereum, Solana, and XRP contracts has passed. They smashed XRP right before the close, which locked out traders, cleared the books, and gave institutions the perfect chance to reload at low prices, leaving individual traders stunned. And the time? It would have looked great with the clothes. Tariffs, rumors of a government shutdown, and anxiety around the world were all in the news. The market went crazy when President Trump announced 100% tariffs on top of the ones that were already in place with China. It's easy to use crypto as an outlet when stocks are going down and metals are changing quickly. It was a great cover. There was one of the biggest bankruptcy events we've ever seen going on while everyone was watching the news. What comes next? You guessed it. Changes to S1 start coming in. As you can see, big players are updating their XRP ETF filings. In order, Franklin Templeton, 21 shares, Wisdom Tree, Grayscale, Canary Capital, and Bitwise come in at the top. This is how to play. When things are quiet, Wall Street doesn't buy. They buy once they've scared off everyone in the retail market. They let the market get hurt. They let the fear take over. Then they come in with their buy walls, which are quietly placed below support. They buy millions of tokens from traders who are panicking because they were just pulled out of their margin positions. This is how the suits play. Retailers feel good about buying the dip. Wall Street carefully makes the dip happen. It gets even more interesting now. Canary Capital has now chosen a ticker for the new XRP ETF. This is XRPC. Think about it, as the price falls, they are actually getting ready for tickers and updates. Do you think that's just a coincidence? Not at all. Behind the scenes, they are setting everything up. There are S1 filings, ticker approvals, and custodian partnerships all set up and ready to go as soon as the government shutdown ends and the SEC starts accepting new ETFs. You'll find a full explanation of how these formal setups work inside, what filings and records to actually keep an eye on, a visual timeline of the ETF process, and how the next phase of use might go once regulations are clear. All of the moving parts are linked by a full infographic and movie walkthrough. The banks, the relationships, and the time frame that could lead to a reset of global liquidity. It's in the message that's been pinned below this video. Let's go back to what happened. Because price isn't the only thing that matters at this show. It has to do with placement. XRP is going from being seen as an asset for casual trading to being seen as a tool for institutions to use for liquidity. When filings like this come in at the same time from several big names, it's not a coincidence. These rollouts are planned ahead of time and take months to complete. All of the time, they happen right after big price cuts. You have to rinse and repeat. First, they build hype by getting some media attention. Then they make a big drawdown to clear out the cash and reset the leverage. Finally, they move in with papers, news, and press releases while the price stays at its newly lowered level. That is the plan. And every time it does, market players are shaken up while institutional players get bigger. Now I understand that many people are in pain. Some went out of business. Some people are just stunned by how the prices are moving. But keep this in mind. People who don't freak out during red candles aren't likely to make it in crypto. They are the ones who know how things work. XRP did not lose value today. It was cleaned. This trick has been around for a long time. Before the next step up, push the weak hands out. Also, watch how the big players act while that's going on. Updating files in grayscale. Franklin Templeton is adding more XRP to its holdings of digital assets, and of course, Canary confirming ticker names. All of these things going on during a claimed meltdown, it's not an accident. That's called buildup. The close are moving around. The forums are still open. The tickers are getting locked in. A lot of people are calling it a scam or an attempt to trick them, but the real game is being played in the boardrooms, not on the markets. For most small investors, that means one thing: don't change your plan on the spot. The noise is the instability. The signal is made up of the filings, the partnerships, and the usefulness. For those of you who have been here before the case, the relistings, and the ETF talk, you already know. In XRP's past, after every big drop, the price has gone up even more. This is about to get crazy. When all the numbers are added up, the number of people killed in this crash could be a record. The billions were gone in hours. Exchanges were too busy. Futures info is late. But all of this resets open interest, which makes way for the next step. That's the start of every real bull market, with forced liquidation and then new buildup. The suits may have flushed everyone down to 1.25, but look what happened next. XRP quickly went back to the range of 220 to 230, setting a new floor in less than an hour. That's not what shopping does. At those prices, that's capital stepping in hard. It's easy to see where the accumulation zones are being protected by the speed of that rebound. And while other people worry about red candles, I see something else: a plan. When things like this happen, the market really changes direction when it consolidates. Historically, XRP's next big move likes to break the previous local highs after a major flush out. This is what I'm watching right now. Things haven't changed in the big picture. Things that are important haven't changed. All of these things are growing: the filings, the liquidity corridors, and the institutional trains. Price was the only thing that changed. There's no problem with that for people who know what's going on behind the scenes. There's a chance there. Because this kind of crash is just a shift. Three things happen: money, tokens, and power are shared. From hands full of feelings to hands full of plans. That's why we stay on the ground. That's why we don't lose sight. Because what's next could change the way this market works as a whole. This is where things really start to speed up, because what happens after this kind of engineered flush is what makes the difference between those who live and those who thrive. The event of bankruptcy we just saw wasn't a fluke. It was a reset of the structure. When you look at the whole crypto world, you can feel it, as well as Ethereum and XRP. The market for derivatives just leveled off. The rebuilding part starts after open interest is crushed in that way, which also means leverage is lost. Right there is where smart money comes in. At the top, they don't have FOMO. They slowly build up at the bottom when the charts look broken, when people don't trust crypto at all, and when mood is at its worst. This is the part where riches are made. The pattern will be easy to see if you look closely. The next thing that doesn't happen after a big XRP run is a slow bleed. It's a coil that gets tighter, energy builds up, and then there's an explosion. It took place after the 2020 lawsuit crash. It happened again after the market drop in 2021. It's happening again now. It's not an accident. That's a loop. The suits are aware of this. Prices didn't drop quickly when they went from $3.10 to $1.25. It was a planned bankruptcy. It's shown in the volume chart. Huge spikes of forced selling, followed by immediate demand to buy within minutes. People with just a few $100s don't make that kind of V-shaped comeback. That comes from companies with a lot of cash on hand and accurate algorithms. And what time is it? Changes to ETFs, talk of a government shutdown, and volatility around the world. Each and every story was perfectly timed to explain volatility, but the filings kept going even though there was noise. Canary Capital, Wisdom Tree, and Franklin Templeton are all turning in, reviewing, and getting ready. While the market screamed for chaos, the infrastructure was being set up in the background. Let's talk about why that's important. It's not enough for the SEC to give the go-ahead for an ETF. Building financial depth is what it's all about. That's not a sign of doubt when you see S1 changes coming in during a crash. It means they are changing their pricing plans to fit the new market conditions. When it comes to fund launches, lower entry prices mean better valuation measures. So when the ETFs finally go live, their cost bases will be much better. That's how the game is played. This event is used to reset the whole crypto risk curve. As soon as open interest is reset and margin players leave, volatility goes down on its own. After that, organizations can fill temporary jobs, real buying, not fake borrowing. That's the base for the next step up. Take another look at the time. Shops are going crazy. Prices fall. Getting rid of things cleans the board. Spikes in volatility. Institutions grow in silence. The volume levels off. Progress on ETF applications. The story changes. There is new cash. The market breaks all past records. Every time the beat is the same. That being said, it's happening with XRP right now as it moves from being an investment to a useful asset. That's the important thing, useful. Even though everyone is upset about the price, what's really going on is the building of a liquidity infrastructure that the standard banking system can use. RippleNet's passageways are getting bigger. On-demand liquidity, or ODL, keeps growing in places like Latin America and the Middle East. These deals aren't based on hype either. They come from having to. The global method for payments is out of date. It's known by everyone. It's also very clear when this change will happen. SWIFT is testing how digital assets can work with each other. MasterCard and Visa are building out stablecoin payment layers that can be used across borders. In the meantime, the Ripple ecosystem is carefully positioning XRP as the neutral bridge asset, the only one that has been shown to be scalable, liquid, and used in the real world. Put that together with what just happened. Before ETFs are finalized, prices fall, leverage is erased, and gathering zones are set up. How does that sound to you? It's calm before the storm. This isn't just a chance. This is getting the whole system ready for the next step in digital banking. Everyone is paying attention to the short-term instability, but here's what's really going on. Central banks are getting closer to letting CBDCs work with each other. As ISO 2022 integration grows, it will link financial messages with tokenized value. To make that possible, liquidity hubs like Ripple's ODL are being built into the design, and ETFs are being made in a way that gives companies a safe, regulated way to get exposure. That's the whole stack. Under all the chaos, that's what's coming together right now. Know what it means when prices drop by 50%, a restart, a change in position. The old market that was based on debt is being cleaned out to make room for real liquidity. Now, things start to get really strong because the way things are set up for XRP right now is a big picture one as well. This is one of the most unequal situations in the whole world of digital assets. Think about this. XRP is stabilizing around 220, Bitcoin is pulling back near new highs, and ETFs are putting money into Ethereum. In the past, XRP has followed these cycles, but it has been a little behind. Once it catches up, it likes to move quickly. In the early stages of earlier bull runs, this structure looks a lot like this one. Bitcoin breaks out first, Ethereum confirms, and then XRP comes in with huge utility-driven momentum. Also, don't forget that XRP hasn't even had its full wave of speculation since the case. While the relistings were a spark, they were not the whole spark. Once ETFs are approved and big payment corridors start sending more money, the assets will have a very different profile. That is the change from a crypto token to a funding bridge. Now think about what the liquidation spiral showed us. That event didn't make people lose faith. It made the way clear. Those who were really holding were left behind after the loaded noise was taken out. When that happens, fluctuation gets smaller, and markets tend to turn around quickly after a selling event when volatility drops. The facts already prove it. Order books are filling up again in key areas, open interest is slowly but steadily building back up, and funding rates are returning to normal. That's a good way to set up a market. That is what you need to see before a gathering by the government. It's not just XRP either. Take a look at the Ripples. No joke meant. Bitcoin futures trading dropped a lot after the crash, which shows that people are less willing to take risks. Ethereum quickly stabilized, and compared to other assets, it had few long liquidations. That sounds like things are under control, not chaos. It's like someone turned off pressure and said, let's start over. XRP, on the other hand, went from 1.25 to $2.30 faster than almost every other top 10 coin. When speed is that high, it means something important. There is demand just below the surface. That's building up, not guessing. When you zoom out on the weekly map, you can see it even better. In XRP's history, every big flush has been built around a higher low. Even though there is temporary chaos, the overall direction is still going up. After every one of these declines, prices have gone through exponential breakouts. This is how markets get older. The weak hands lose, and the people who build things move in. At the moment, the infrastructure is made up of institutions. Let's talk about how all of this works in our minds. When most investors see a 50% drop, they think of danger. But smart money looks for cash. Every time a stop loss is hit, a forced bankruptcy happens, or a panic sale happens, money is moving. It doesn't matter to them what the news says. They care how things are set up. They already know how this story ends. It's no longer trade based on emotions. People who follow the rules are the ones who stay. And that's when markets change how they act. Once you reach that point, you will no longer see random spikes, but rather structured accumulation bands. Those times of no change that make people in retail crazy but let insiders know that positioning is starting. Then, all of a sudden, something prompts action. Time to time, it's an ETF approval. There are times when it's a payment connection. There are times when it's just cash going up. Everyone is surprised when it does happen, though. Besides the people who knew how things were set up, that's where we are now. XRP's story doesn't end here. This is how things get ready for the next step. Take a look at how the events fit together. ETF forms are open. The lawsuit was over. The liquidity channels are growing. New partnerships are being made. Reset the volatility. Things are getting ready for the next step. What's the most important thing? People are still living here. In spite of everything, it falls apart. The weights, how they manipulated. The XRP group is still one of the strongest in the crypto world. That toughness is important because price behavior follows conviction. Retail may not have as much cash on hand as institutions, but they will be around for a while. And that's what forms the base of every big run. There's one more part to this that most people miss. The big picture of the economy. The current state of inflation, interest rates, and the instability of currencies are all coming together to make the ideal conditions for alternative liquidity systems. Reserves are being spread out by central banks. Different countries are trying out digital currencies, and businesses are looking into blockchain settlements. That's not a lie. That's how finance has changed over time. And XRP, which is designed to make settlements faster, is right in the middle of this change. That's why these things, the changes, the volatility, the ETF filings, and the institutional moves are so important right now, because they're not alone. They work together. If this crash doesn't happen again, the XRP market will be much cleaner, leaner, and more liquid. The forced liquidations have already been taken in. The order books are making a new start. Now, things are getting ready for a major price change when the next set of news comes out. If you're watching this market and not sure if this is the start or end, history makes it clear that this is the setup phase. Giving up is the beginning of every great run. Every breakout starts with not believing it. This has happened before. It will happen again. It's not the same this time. As the whole world looks on, the buildings and grounds are ready. They have been filed. The rails are put together. Once more, XRP is at the center of everything. Here is the truth. Most people in the market will be shocked by what comes next. Big players are already getting ready for the next big phase, while small traders are still getting over the shock of the liquidation. It's clear in the shift. Not fear, but getting ready. Not to worry, but to be patient. People who work in this field call this phase stealth. It's the calm after the storm. Before the next leg starts, this is when insiders quietly move around. And the way XRP is set up right now is perfect for that. Most assets need weeks to get back to normal after a 50% loss. It took XRP hours to do. It's not a coincidence that's a lot of cash coming back into the market, along with new money getting ready for what's next. The changes to the ETF weren't a fluke. They sent a message. While everyone else is still hurting, institutions are building up infrastructure. Their eyes are on the regulatory doors that will soon open, and it won't be slowly. It will happen right away, such as these filings, partnerships, and liquidity rails, which are already in place. The only thing they need is the green light. That's how Wall Street works. First, they build, then they quiet people down, and finally, when no one is expecting it, they launch. And when that trigger goes off, stores rush back in. The best ones are gone by then, though. This is what happened with Bitcoin ETFs, too. We saw it with the approval of the Ethereum ETF. We're seeing it form again with XRP. This time, though, the setup is bigger. XRP can be used for more than just speculation on its value. It's the real movement of money around the world. We're talking about settlement rails for money transfers, remittances, and banking, all fields that deal with trillions of dollars every day. Also, institutions are looking for yield, while traders are looking for volatility. That's why XRP is getting so much attention right now, because once ETFs are up and running, investors can put a lot of money in a safe, regulated package, get to cash quickly, and let the underlying utility do all the work. Now, take a step back, check out what's going on around the world. Countries are looking into digital settlement. The way finances work is getting more modern. Tokenized value transfers are even being tried out by SWIFT. We've been waiting for this coming together. Blockchain liquidity and traditional finance are coming together. XRP is no longer fighting the system. It's quietly becoming a part of it. They don't scare the real holders because of this. They know what the big picture is. As adoption speeds up below the surface, they know that volatility is just noise. So while some people count red candles, those who get it look at the buildings. Ripple is making corridors bigger in the Middle East and Europe. With tokenized reserves, central banks are testing cross-asset settlement. Instant settlement rails are being tested by corporate treasuries. All of that leads to one result. There is a need for efficient and neutral liquid assets. That's where XRP really shines. Okay, let's talk about what makes the next wave happen. When the fear goes away and the charts start to look better, doubt starts to set in. People who trade think it's a dead cat bounce. People are still skeptical and the volume is slowly rising. There is silence at the start of every big breakout. After that, something turns around. A notice from the government, a nod for the ETF, a new activation in the corridor. All of a sudden, the asset that everyone had given up on is back in the news. Prices don't slowly go up. They change the price. When the market realizes it's behind, momentum picks up. That's where things start to change, and that's what's happening now. But here's what you should remember. It's not about hype. It has to do with placement. You can now trade again on the market. There is no longer any leverage. A lot of people are scared. That's exactly when big changes take place. The fact that XRP has bounced back from this crash shows that people are still confident. It's getting stronger. XRP's next big move has been made possible by every flash crash in its history. Remember that basics always win in the end, even when there is a lot of noise, and XRP is stronger than ever in its core. Regulations are now clear. There is growing institutional demand. The ecosystem is getting bigger. The story is also changing from a lawsuit to a global settlement. That's why this moment is important. It's the start of a real run, not the end of one. Due to the fact that XRP's technicals, fundamentals, and macro environment are all in sync for the first time in years. So, XRP family, keep your head up. This is a good time to be patient. The market is only setting you up for the next move up every time it tries to shake you out. A lot of people may not have seen the liquidation storm coming, but for people who see the bigger picture, it was the cleaning up before takeoff. The next step for XRP is not based on guesswork. Adoption, infrastructure, and scale are what make it work. Those who stayed focused will already be where they need to be when the next green candle starts.